Hi, Amanda Markham here with another awesome episode of the Markham Sold Show. You're going to be super impressed this week because we've got some really cool information. I'm with Susan Hatfield, my go-to lender with Benchmark Mortgage here in Richmond, and we're going to answer the the number one question that you get, and we get it too, is about interest rates. What's the going interest rate, and how that's not an easy question. Like, it's a loaded question, so we'll get more info.
Absolutely, it is a loaded question. So if I asked you today, would you rather have a 3.875 interest rate or 4.25? What would your answer be?
Well, unless you're trying to trick me, which I know she wouldn't, I would say the lower one,
Yeah.
3.875.
Actually, that's what most people would say would be 3.875. I just want to show you an example today, or talk to you about an example. So if you were purchasing a home for $150,000 and you had a 740 credit score, putting 5% down.
Sounds pretty normal for our area.
Yeah, absolutely. So you could do a conventional loan with that credit score and with that down payment, or you could do a conventional loan.
Well, you said conventional. FHA?
FHA.
Okay.
Sorry,
Okay.
FHA or a conventional mortgage.
Okay.
Well, because of how FHA's mortgage insurance works, over the life of the loan, even though your interest rate would be 3.875 on an FHA versus a conventional at 4.25, it would cost you, I have the calculation here exactly, $13,468.83 more.
Just fees, just interest, just paying.
PMI, mortgage insurance, works different on an FHA loan versus a conventional mortgage. So it's real important to make sure that you know exactly what you're getting yourself into. Instead of just looking at an interest rate.
Yeah, we have that. It's so common. And so that's one of the things, and that's why we work together. And I trust Susan with everything, because she will not help anyone unless she sits down with them and makes this plan, finds out how long you're going to be in the house, how much money do you have now, how much money we have later. I mean, what's your retirement look like the whole picture, because she's a certified mortgage planner, not just a loan officer, who doesn't care about their clients and the life of the loan, or the life of the people and in their home and everything. So I think that that's a really cool example of why it's so important to sit down and really figure out the best plan.
Absolutely. Well, getting a mortgage, it's just like your fingerprint. Everybody's situation is going to be just a little bit different. I like to compare it to car insurance. So I've got a 17-year-old boy at home, and my insurance is probably a lot more than yours.
I'm not
because of that. And so with us, same thing with a mortgage. There's so many things that take into place.
That makes everyone so different.
It makes every situation we have different.
Yeah. Well, thank you so much. That's really interesting information, and I'm really glad that we've kind of answered that question, but kind of disproved that theory that lower necessarily isn't always better. It's looking at the whole picture. So, and that's what we do for our clients. So thank you so much.
Oh, thanks for having me.
Of course. We'll see you next week. Thanks so much for tuning in.